What's up, traders? Got a long video for you guys today. Going to share all my trades, trying to keep it transparent, winners and losers. So first things first, I went 2 for 7, 2 winners, 3 losers, 2 break even for 29% accuracy. That's fine with me though, because I finished the day up over 7 Rs. Now I want you guys to learn some things from the bad trading I did today, right? Often people are going to share their winners and only their winners. You know, you really can't learn that much. People taking picture perfect patterns or whatever trades work out. This is an example of bad trading that I think people can learn from, right? And this objective statements I'm going to make here. So Maxer. Now this thing formed a pivot in the pre-market. That's my first warning sign. We should probably clear here before you even think about going long, because there's some sellers going on here, right? Sellers appeared here. They're probably going to appear again. I knew that going in. And then I looked at the daily and I said to myself, okay, this is probably what we call a novice gap. A novice gap is one that is basically it's over gapping. The gap is too big and you're coming from an extended move, right? So this thing came from $4. Going even further back, it came from, I think, $3.50, and it's basically been running up. Now imagine you were long from down here, way back here, right? When you get a big gap up like this, what are you going to do? You're probably going to start taking profit, right? And that's why it's called a novice gap, right? As compared to a professional gap. That's probably a topic for another day, but basically I try not to long novice gaps, and for some reason I got fixated on this and got some bad habits, just over traded it, and I want you guys to learn from this, right? So I basically took this first buy setup here before we had breached resistance, and we hit resistance, and that was my first sign that, okay, this is a bad sign. But I added into it thinking that we're going to power move through, right? This is a bad trade. You want to see a retest happening above the level. You want to see resistance becoming support, right? Not resistance becoming resistance. Right, so basically I got flushed out of that for less than 1 hour, whatever, with the average cost, not a big deal. And then I started getting fixated on this thing. So, okay, well, this is such a big gap. I don't care if it's novice. I'm going to show this. I'm going to get that 50% retracement. I'm going to show this thing, right? I forgot to look at the higher time frame, right? Multiple time frame analysis. I went long on a red candle on a 15-minute chart. That's a bad decision, right? I like to make sure that the candle I'm going in on the time frame I'm trading, the time frame below me where I'm usually getting my entry, right? The entry time frame, and the time frame above me, the big time frame. I want them to all be in unison, right? The same color. That just increases the probability that the move's going to work. So when you're going long, right, on the lower time frame, but the big candle's red, the odds are not that great. They're not in your favor, right? So that was a bad trade coming back into this. And basically I saw some volume, you know, making up all these stories, whatever, to myself, that this was going to be the bottom, and then I got flushed out of that, right? So that's 1 hour. And then I came back in, saw this, and I was like, what am I doing? Just stop trading this thing, right? Stopped, got out of break even. I ended up coming back again one more time for this fake out thing, but whatever, that's not a big deal. It's a slightly small loss. So basically I started the day in a hole, right? And there's a lot of us, we start the day in a hole, and we end up getting worse and worse because we're desperate to get our money back. But after this trade, I was like, you know what? I need to be smarter, right? I'm reverting back to my old ways. I'm trading like a buffoon, getting desperate, all this stuff. I need to stick to the process, stick to the patterns that I trade, that I'm trying to trade. And this all, again, comes down to pattern-based trading, guys. This is what I've always been a proponent of, and I'm moving more and more towards it. I only take certain patterns, right? It has to look like this. It has to look like this, or it has to look like this, whatever, right? And the reason why pattern-based trading is a good fit for me is because everything's preset, right? You take it if it breaks this high. This is your entry. Your stop has to be here, right? You take it if it breaks out from this base. Your stop has to be here, et cetera, right? There's preset stops, targets, entries. It's all fixed, so there's less decisions to make. And not just that. Someone actually provided this comment to me today. Say, Robert, if you do a recap, can you please outline the criteria for the strategy so people can they can learn to identify it themselves and trade it for themselves? Repeatability, right? And that's what I'm here to do. I'm here to educate, or at least try to share what I'm learning, right? I'm not saying I know everything. I'm still learning a new strategy or a new style of trading, and I like to share that with you guys. So repeatability, guys. If you have the criteria, that will help you be more consistent, right? Consistency. What is consistency? People focus on the outcome, right? I want to be a consistent day trader. I want to make money every day, all this stuff. But they're not focused on the consistency of process, right? In order to be consistent, you got to be doing the same thing all the time. And what does pattern-based trading allow you to do? It makes you do the same thing every time, right? Only take these setups when they appear. Enter if this happens, A, B, C, and D. Has to be looking this way. Put your stop here, whatever the case, right? So uniformity, repeatability, and that would it's done wonders on my trading, and it's something I wanted to share with you guys. Okay, so Maxar, that was basically it. Big deep hole. I managed to climb my way out. Now let's go to LK. So LK, this thing was This thing was a mess. On Friday, I gave a huge sum back. I was up like 7 or 8 hours. I don't even, didn't do the math, but I added into a huge winner and then let it come back to break even. Not a big deal. We started forming an ugly looking symmetrical triangle, right? Basically just waving inside of here as the sellers were selling for less and less and the buyers were buying for more and more, right? So at some point you got to break out of this thing. And I took it right when it broke out of the top of the triangle. So there was some volume. I wasn't alone here, right? Broke out. And then I didn't see any continuation. We failed to break this high, right? On this pullback. I didn't like that, right? So you want to see follow through. So when it came back into the triangle, I said, okay, that's not a good sign. And then it failed to make the new high. I was like, well, that's not a good sign. So I just bailed at break even. And then we started kind of curling here. Curling and doing a buy setup. Now this is something I actually want to discuss here. So this buy setup, if you trade it purely on the pattern, it would say put your stop here, below here, and enter here, right? But if you look at that, that's only 5 cents. Guys, this is LK. The spread, is a penny or two at the time, but it can go to 5 cents. So this is one thing you got to be realistic about, right? I put my stop below this wick. I said, okay, if the buyers who stepped up here, if they don't step up again and get shaken out, I'm leaving with them, right? There's no point in this move. So I doubled the stop from 5 cents to 10 cents. And that you got to be realistic with this, guys. I see people putting 3-5 cent stops, claiming huge returns, all this stuff, bastardizing R multiples. And that's fine with you. But if you end up getting slippage and taking -2 R losses, probably got to rethink that, right? So, and as we came out of that, and then the volume started pouring in, and this is where we started making the run up, made the big move, the big surge, started getting semi-climactic. I didn't really like that, and I just wanted to get out before high of the day, so I did that off for 5 hours. So what did I end up doing? I kept watching it here. It kind of consolidated between all-time high and high of the day in this zone. I was like, well, it's probably going to do a breakout again, right? So when it broke out here, I liked that. I wanted to do a retest, and it came back into the base really deep. I didn't like that. Right, it shouldn't have come back this deep, but I was like, I made my money. I don't want to mess around with this thing anymore. So it actually ended up doing a power move outside of that and broke out to new all-time highs. That's okay. So coming back to patterns, guys, they appear everywhere. Patterns appear everywhere. You believe in the fractal, you believe in all this other stuff. We got to, well, at least for myself, right? I've been trying to stay away from trading in a vacuum, because the market has more than just patterns. The market has phases. It has market structure. There's geometry. There's all these different things about it. There's context of the moves. There's fundamentals you got to be aware about. And if you just trade in a pattern and not apply multiple concepts, look at different time frames, all these different things, you're just lowering the probability. Sure, these moves work, right? It's like a Venn diagram. If you take a buy setup, an ABCD, well, the market is consistent of ABCDs, right? There's only a certain subset of that is tradable. It's good, right? The rest is just the market doing its thing. So that's my opinion and whatever the case, but I want to discuss the market cycle, right? So 4 phases. I've done some videos about this, 4 phases of the market cycle. This is a theory concept from Wyckoff or Weinstein, a bunch of other forefathers in the technical analysis world. But basically, there's 4 phases, right? 1, accumulation. No one cares. People are buying inside a chop or in ranges. There's ways to trade that. I personally don't like that stuff. And there's stage 2, the markup. This is the uptrend. It's where everyone's buying, right? This is where the average person, early people get in. Everyone's making their money. It's all good. There's greed and all that stuff. Then you get to stage 3. Stage 3 is kind of anxiety. Sometimes you skip stage 3, you just go straight up and down like that. But often stage 3 can look like, it's anxiety. There's failed breakouts, up, left, and right, center, everything. It's just indecision. Nobody knows what's going to happen. And then you enter stage 4, right? Stage 4 is a downtrend. Stage 4, sell off, and then you kind of come back to 1 once everyone's capitulated and sold off. So that's the 4 stages of the market. And knowing what stage you're in on the larger time frame and the smaller time frame and aligning that will increase the probability of your trades, because it just simplifies things. Don't trade here, don't trade here, don't trade here unless it's climactic. Stage 2, look for uptrends, look for buy setups and breakouts. Stage 4, look for sell setups and breakdowns. Simple, right? It just simplifies things, and if you go off patterns, like I'm going off patterns, it just, guys, I don't want to get into it. Anyways, okay, so trade with the stage, right? Now, another thing I want to discuss before we get into NIO, I know I'm rambling here, is understanding the psychology of the market. Pattern failures, what other traders are doing. Where are they long? What's their pain point? Where's their stop going to be? What are traders on the sidelines doing? What are people on the opposite end looking to get in? And I've been trying to read about this and study these things, and I'm not saying I'm an expert in this, but it's done wonders on my trading. It allows me to stay in the moves as I try to analyze what's happening, what the current move is going to look like, or where things are going to fall apart, where I'm going to be wrong, etc., etc. And I think it's really important. I read this quote somewhere, is that We don't trade stocks. We trade other people's emotions. Right? So let that linger for a bit. NIO. So NIO, this thing was a huge runner today. Big runner. I didn't even have it on watch. I want to thank George for tweeting about it. I saw it come up on my feed and I watched it just run up. So I pulled up some charts here. I was like, this thing's probably going to go parabolic. It's a cheaper stock. I don't know what the float is. Anyways, I got the 200 weekly. The simple moving average was here, right? It's not in this chart, but you got it's 484. And I was like, okay, well, it's going to bounce off a level. It's probably going to be around here. So I messaged my buddy. I sent him the chart. I said, hey, waiting to short at 485, 200 weekly SMA. And I just sat there. This was at 1:11 market time. I sat there and waited for my signals, right? My criteria. And what was I looking for? Looking for a climactic. Same thing that we saw on ITCI the other day. Do you guys remember that? Well, I caught the front side of the move, caught the stage 2, we halted, and then I shorted out of the halt and it got to my break even and I bailed. But it's the same concept, right? So repeatability, guys. If you can have some criteria that you memorize, you study, and put those in front of you, and only take the trade if these criteria are met, then you're going to increase the likelihood of winning trades, right? And not just any winning trades, but big trades, trades that have capacity to run, to be multiples bigger than your losers. And that's basically the name of this game, right? So NIO, we started coming up, we started getting pretty parabolic. What's the first thing I was looking at? I was looking at wide range bars. These are called wide range or super wide range bars. They're bigger than any bar formed on the day, right? Look left, look to the left. Nothing was that big. Not even the open was that big, right? They're multiple times bigger than your average bar. That's one, right? Looking for super wide range bars. 2, you're looking for climactic ending volume. We got that here at the level, right? If you can get to a level, that's perfect. ITCI did that too, right? It came up to 42, whatever it was, 50 or whatever the level we had off the weekly chart. Same thing here, at a level. This is where people are going to look to sell. It's kind of like a roller coaster, right? So you build momentum, you get the steam, you go parabolic, you get extended from the moving averages, right? You get super far from the moving averages, which is basically, look at that distance. It's like almost, there's $1 from the moving average on the 5-minute chart. And super extended here, the moving averages start splaying out and getting kind of diverging from each other, right? So to tell you how extended you are. And it's like a roller coaster. You ratchet your way up, you ratchet your way up, ratchet your way up. You get to the top, there's an oh shit moment where the volume will reflect that, right? Everyone's either FOMOing into the move, right? All these people, the last buyers are in, and then you're looking for that type of maneuver, right? So that's what I saw, and the entry is usually on the break of a bar, right? The break of a bar, depending how fast the move is, right? You can take it on the break of the 5, break of the 2. This one, I switched to a 1. I rarely trade off a 1, but I said, hey, this thing's going super parabolic, right? We just ran up $1 in like 15 minutes. So we broke the bar, and I was like, oh man, I missed the move. When it kind of started wicking down, I was like, I missed the move. Let's just wait for a pull up. And we got a pull up, and I couldn't get myself filled. I pressed the button, and it's just waiting, sitting there, accepted. And I checked IB, or I checked in my platform. I double clicked the S, and it was like 100 shares available. Checked again, 150 shares available. It's like, I need to get myself filled. I need more shares than that, right? And then I slowly started getting partially filled, and my average came out like, I think 475 or something like that, right? And I was like, okay, this is perfect because my stop's above high of the day. I think we can come back. We can come back to some levels and get a half decent gain here, right? So what happened? Basically, we cracked the 5 low, and then we started flushing. And I said, my first target's here because I know people are going to try to buy this support, right? They're going to try to play the bounce off minor support, the top wick, whatever, right? And lo and behold, that's what happened. We came up, the volume started increasing, right? A sign that this move is probably coming to an end. We might get a pullback or something. So I took my first partial there, half. And then I started just watching, right? This comes back to the psychology. What are other people doing? And I kind of just, I like to think about these things while I'm trading. Again, no expert in this, but I'm thinking, okay, there's people going to try to take the first ABCD or buy setup, whatever, off this pullback, right? This is going to be a good entry because we're going to go to the moon. So people take that. That's what this wick is. People went long here, right? People went long down here. People went long up here. And what I've learned from other traders, other experienced traders, you never take the first buy setup coming out of a climactic. You never do. It's a fake out, right? It's a fake out because there's people who went long here who didn't exit here. They are looking for a place to sell, right? They're looking for as close to break even as possible and minimize their loss. And that's why this failed. And then we get kind of into this scenario where people are taking it here. People are taking this, right? This looks like a half decent setup. But guess what? The guys who are trapped here, let's come to this chart. The guys who are trapped here, their break evens in this area. So when it comes up to here, they're looking to sell. Sellers already stood up, right? They stepped up here. sellers are going to step up here. Whether you're shorting, right? People are reloading for the short, or you were stuck underwater for a bit, you're looking to get back out at break even, you're bailing. Right? So the guys who went in this move, they're getting sold on by the guys who are in this move. That's a wave of selling they have to overcome. First sign of weakness, people are starting to bail out. Everyone's stop is here and here. What happens when we flush? We flush, we crack, right? It's a panic exit, basically. Panic exit, right? A lot of collateral damage was done here. The buy setup is probably not going to work. So basically, I held again until the volume told me that the flush was over. This climactic or ending volume, partial there, and then finally at the close, I think we started seeing a little bit more of that here on the wide range bars. When the volume goes up, I'm partialing out. Usually a sign that the bounce is imminent, and that's basically it, right? So this is I think 4 Rs, 6 Rs, 7 Rs, 8 Rs. Came out with a little over 5 Rs total. And that's basically the trade, guys. Line up the criteria for repeatability. This is the same play that it was on ITCI, right? Watch for the criteria, the super wide range bars. Watch for the volume, the climactic. Watch for the extension of the moving averages. Watch for the moving averages to splay out and get parabolic, right? Like the moving average went vertical almost. I don't know what the degree is there, but that's like almost vertical, right? And you take it on the break. Put your stop at the high. If you're wrong, you're wrong. You get blasted through. If you're right, you probably have the high of the day there, right? It's a climactic. That's by definition. And your target, usually the 20 on whatever time frame you're trading off of. It's probably roughly the same area here, 450, 430, whatever. That's your first target. But this one, just because of the scale that we had come up, I thought, we're probably going to come back to 4. 4 is a good whole number. And if 4 loses it, then it's goners, because, again, there's all these longs here. People got stuck. And definitely not many shares for short, at least from my broker. So it's kind of a one-sided move there. Anyways, that's that. And I hope this recap's been helpful. I know it's been rather long. I hope it kind of outlines the strategies, the criteria. I'll put a link down below for the video that Sammy uploaded recently on how professionals take reversals. And this is the only reversals I'm taking from now. I'm not going to mess around with these 15-minute whatever reversals that go against the trend, because often all you're doing is just shorting a pullback, right? Or this way, all you're doing is going along a pullback. That's counter trend. You want to see climactic, you want to see parabolic, the roller coaster. You want that oh shit moment when people are caught on the wrong side, and that usually leads to the best type of moves. Okay, so thanks for watching, guys. Let me know what you think down below. Comments, questions, feedback, hate, whatever. Take care.